Hey everyone, this episode is brought to you by River, the place that I personally go to securely invest in Bitcoin with confidence and with zero fees.
If you want to trust the system, that's what Bitcoin's for. I mean, that's why it's a state change. It's this unbelievable tool that really empowers people to have trustless settlement without a trusted third party. I think the thing that people miss about this, though, of course, is that this also empowers the baddies or the US government or the private sector ghouls that have, run crony capitalism for the last 50 years plus or whatever, right? So I think that this idea that Bitcoin just eliminates corruption is just ridiculous. Of course not. There can be corruption in a Bitcoin system.
Dude, this article, good Lord, you and Whitney, Whitney Webb, for those that might not know Whitney. You sent this out. I started reading through it, and I'm there like, I don't know, a half hour later. I think this takes about an hour, maybe a little bit more to go through this entire article. And I'm just, anytime I read content from you or Whitney, I'm just kind of left like, how in the world do they do this amount of research in a single lifetime? This is like a book. The amount of work and everything you guys put into this is wild. But yeah, welcome to the show. Sorry to just keep going on. Thanks. Sorry to just keep going on, but thanks for coming on the show. And I want to start off with this. And the name of this article is "The Chain of Custody: The Mafia Holding the Elite's Bitcoin." So zinger of a title, but let's start here. This is like, what were you guys trying to accomplish in a very simple way? Describe it very simply for the audience. What were you guys trying to accomplish with this article?
Yeah, totally. I mean, I think as always, right? I've done editing for a long time now. I think the best work always comes from stuff that you're really like passionate about and interested in. This work, this kind of research vein we've been on for the last like 6 months or something like that, we've probably putting out 4 or 5 articles, has really kind of been looking at this, sort of, where does intelligence and, private capital, venture capital connect? And then where does this sort of new financial system, this kind of idea of the Bitcoin dollar, where do these groups kind of come and meet in the middle? So obviously Whitney's like kind of quite literally written the book on, kind of the first part of that, the intelligence affiliated venture capital and the mob kind of, and intelligence sort of meeting with, fintech and, technology firms and the public sector. And then I've written obviously, a bit about the Bitcoin dollar. I wrote a book called The Bitcoin Dollar for Bitcoin Magazine. And so we've just been sort of kind of picking away at this, kind of, from 2 different angles. And this research vein is really met in the middle, for better or for worse, good for, content, but, maybe the implications aren't so fantastic. But I would say in general, this is kind of the first one we've ever done kind of, key takeaways at the beginning. Had a lot of people reach out about the last one, Debt from Above, this kind of piece about this satellite company. And kind of saying that they had tried running it through a bunch of like, LLMs and trying to do, machine assisted submissions. And it was actually rejecting it, saying that, this is a pretty conspiratorial piece with a lot of accusations in it. So we're actually not going to grok it for you. So this one we decided to do it for the people. Right at the beginning, there's kind of these key takeaways. But I would say in general, it is sort of this looking at intelligence affiliated VC firms, how since kind of the late 90s .com boom, have really just dominated the tech industry in general, and specifically the financial tech industry. And then looking at how these firms have kind of gone from being, a profit generating via kind of like, consumer revenue coming in, from customers, and rather being about creating these free to use networks, generating hordes of data, and then selling that data to, data brokers, intelligence agencies, what have you, and basically using customer data as sort of like a new commodity. So that's still going on, obviously, and kind of the biggest people that are sort of the most known for this, maybe the most successful of this, are, the Facebook affiliated groups, and then of course PayPal. The PayPal Mafia, sort of this like infamous group of folks that Reid Hoffman went on, who's a big part of this piece, to do LinkedIn. PayPal was then bought by Pierre Omidyar's eBay. eBay was kind of one of the first groups to really do this, data broker, basically private intelligence group. So yeah, kind of looking at these intelligence affiliated VC firms and how they are, now really moving into the digital asset space, extremely so. And then also kind of looking at these entrepreneurial social groups, how do you kind of I'll use the word control, but how do you sort of influence, the people behind these groups, the CEOs, kind of right at incubation of these startups, kind of kicking off. And, in the COVID era, we learned a lot about the World Economic Forum's young global leaders and how they sort of, there was that great Klaus Schwab quote of like, we infiltrate the cabinets, and, how there was this sort of, world lockstep kind of response to COVID. Well, you had a lot of these sort of social groups that was focused on the public sector, again, infiltrating the cabinets and kind of being, a lot of the world leaders are, significantly influenced by these social groups. So now we're kind of looking at these, not so much the public sector, but the private sector social groups. So this group in particular, that's a big part of the focus of this piece, is Endeavor, which is very similar to like a YGL, but really looking at the private sector emerging markets entrepreneurs. And the reason why they do this is because they can kind of mask, this commonality of funding coming from a small group of people in this sort of like, oh, this is so great. It's this wonderful free market blossoming of innovation in Argentina. But really, it's like a couple people like a Pierre Omidyar and Edgar Bronfman Jr., or Reid Hoffman, who are using, their funding and their influence to, basically invest and influence into these like now core infrastructure groups of the modern economy. So looking at this Endeavor group, and unfortunately seeing a lot of ties to like a Jeffrey Epstein, a Nexium, these kind of more coercive, influential groups, these, maybe even blackmail rings, you could say. So looking at all that, seeing all this coming together, and then the piece sort of focuses a little bit on, this one Bitcoin group, this company in particular, Zappo, sort of funded by this legendary Bitcoiner, Wences Casares, who's kind of considered the patient zero of Silicon Valley, orange pilled Thiel and Hoffman, and, brought it to all of these, these stalwarts of kind of the American, intelligence information broker entrepreneurs, mostly coming out of California. And looking at Zappo, really interestingly enough, they're very Endeavor affiliated. Wences is coming out of Argentina, which is where Endeavor, it's focusing on emerging markets, Latin America specifically. And then you look at the first advisory board of Zappo, and seeing D. Hawk from Visa, John Reed from Citi, and Larry Summers, sort of, from the Treasury and from a bunch of other private and public sector kind of revolving door, when it's convenient in the private sector, when it's convenient in the public. So there's a lot to learn from these guys, because, these guys are sort of the proto architects of what, we call the Bitcoin dollar system, are all right there on the Zappo board. And then you look at what does Zappo do? It's basically set the benchmark for, custody, really like, doing absurd things, putting keys in space, drilling, vaults and Swiss bunkers, and, developing these pretty crazy biometric systems for like really strong key management. And then, of course, at the same time, kind of facilitating, stable coin and US dollar banking, and connecting it, very importantly to the Bitcoin system. So that's the overview of the piece. Quite a bit of a rant there, but that's basically
here.
Yeah. So that's the brief overview. And of course, this is just part one, but I'll stop there. But that's more or less what we've been working on here.
I just want to highlight, so people that listen to our show are familiar with a company called Zappos, the shoe company. This was the Tony Hsieh company. We are not talking about that Zappos. This one is spelled XAPO. It's now you might have to help me here. I saw Gibraltar and I saw headquartered in Switzerland. Which one of those two Is it?
Yeah,
Is
well,
it out of Spain or Switzerland?
So they came out of Argentina. That was where he funded it. But yeah, they re-registered in Gibraltar,
In Gibraltar. Okay.
for jurisdictional reasons. Yeah, and then the actual like kind of infamous Zappo vaults are in Switzerland.
In Switzerland. Okay, thank you. Okay, where I want to jump to right out of the gate. So you talk about Bitcoin dollars, and I think for the audience, when they hear you say that, they're saying, "What does he mean by a Bitcoin dollar?" Explain this as simply as possible.
Yeah, totally. I think, I've done this quite a bit now. I think the easiest way just to sort of establish the analogy is, Bitcoin dollar a la petrodollar. So it's probably the easiest analog. Um, and the idea is much like the petrodollar. Well, let's explain the petrodollar, right? So, Nixon shock, early 70s. The US decides to cut from, a gold backed standard where you could actually take your reserve notes, go to a bank and get gold back. Legally, they had to do that. So you could argue, of course, right, the dollar was backed by gold. When exactly that mechanism sort of broke down, from a market standpoint, is up for debate. But the actual Nixon shock happened in 71, and the U.S. Officially removes itself from a gold standard. And it's a very interesting time, and everyone is sort of like, okay, well, here's the end of the dollar. There's going to be de-dollarization, all these things. And actually, what happened was we saw military presence from the United States, really significantly ramp up in the Middle East and in Saudi Arabia. And we saw an establishment with the Saudi government of this, petrodollar system in which, for exchange for military defense, they would only allow the sale of petrol, of oil, to be denominated in dollars. So in effect, what that meant was the U.S. was able to offshore and shovel the, should be inflationary effects of a depegged dollar into the Middle East, and said that anybody in Asia, anybody in Europe, really anywhere, anyone anywhere that needed oil, that wanted to industrialize, they needed to buy dollars first. So we created an artificial demand for dollars. I say we, like I had anything to do with it, but the U.S. created an artificial demand for dollars by establishing this petrodollar system. And for 50 years or so, they were able to, continue basically the U.S. Treasury Ponzi, if you will, but basically servicing U.S. debt by selling, government debt and dollars to anyone that wanted to industrialize. Which, frankly, anyone in the 70s, 80s, 90s, it was pretty much every country wanted to industrialize, and many of them were not oil independent. So, establish the system. It's not a de facto monopoly, of course. There was settlement and other things, or rather, it wasn't a literal monopoly, but it was a de facto monopoly. So, 95% plus of all, global petro sales were denominated in dollars. So then we fast forward to 2020. Right as the COVID, lockdowns are starting, and all of the big crash happens right in that like second week of March in 2020, and we see something that is totally absurd to me, being kind of a 90s kid, where all I've sort of known is the U.S. increasing presence in the Middle East. We see the oil futures go negative. So not quite literally, obviously it's a speculative thing, but basically they're paying people to take oil, which is just so completely absurd based on everything I've ever, sort of grown up with. And then, very shortly after, the U.S. pulls out of Afghanistan, right? But a very interesting thing happening at right about that same time, 2 months later, in May, is the Bitcoin halving, which for the first time brings relative issuance down below 2%, which is, the target inflation rate of the US dollar, as well as gold coming out of the ground, right? Something in that 1.5%, something like that. So right before, this, oil goes, or right before the Bitcoin relative issuance goes below the rate of the dollar and gold, we see this really funky thing happen in the oil markets. And that's when I would say was sort of the death of the petrodollar, and the creation of the Bitcoin dollar system is in that market mechanism. And so obviously Bitcoin crashed then as well, went down to like $3,300. but it basically 20x within the next year, within the next 12 months. Pretty absurd for a commodity. So there's a lot of parallels to oil and to Bitcoin, as sort of this like energy commodity. Obviously, a lot of things different. It's a lot easier to move Bitcoin around than it is to move millions of barrels of oil. But it is really an energy commodity, and we've created essentially the same de facto monopoly of the ins and outs of the Bitcoin system, being 95% plus denominated in dollar pairs, whether they're stable coins or just USD, but mostly stable coins. And so we've in effect created another demand for US dollars within this inflation into an energy commodity, into the pricing of a depegged energy commodity. So it used to be oil and now it's Bitcoin. And we're seeing a new demand for US treasuries in the stable coin system, which is innately linked to Bitcoin's price appreciation. So that's sort of kind of a quickie of the Bitcoin dollar system. But in effect, it's how do we create artificial demand for dollars as dollars get more and more printed and the individual purchasing power inflates away. We retain the net purchasing power, much like we did in the petrol dollar system by creating artificial demand for U.S. treasuries.
And the wild thing, I think, that might be lost on folks, they hear about all of these things and they're saying, well, who in the world would keep buying all? And they just don't have a deep appreciation for how much dollar denominated debt there is around the world,
Totally.
to the tune of trillions, and where they're going to have to go next because of impairment in fixed income markets is going to be even crazier.
Totally.
Do you buy into this idea that pretty much the only buyer kind of in the coming decade starts to become the stable coin companies? Or who's
Totally.
going to buy? Yeah, who's going to buy this?
I think it is the stablecoin companies for sure. I think there is sort of a movement, at least socially, of kind of this de-dollarization. With BRICS currencies, and there's a lot of talk of this here and there, but we're not really seeing that in terms of actual, the buyers. We're seeing huge amounts of demand for U.S. treasuries in these stablecoin providers. I think in the article we say, and again, I think it changes kind of every day because, people sell, people buy, but, the stablecoin issuers are like the 18th largest holder of US debt in the world, which is just insane. I mean,
it's growing at a rapid pace, just growing
at an unbelievable pace. I mean, I think $1 billion of Tether was just minted today. And again, sometimes it's redemptions, who knows? 250 million of USDC was issued today. And what that means is there has to be some sort of underlying asset to sort of offset these liabilities, these tokenized liabilities. And so they have to buy debt to basically create more dollars. It's exactly the same mechanism done in the private sector capital creation of the banks that sort of hover around the Federal Reserve, right? I mean, the Fed doesn't print dollars; it prints treasuries with the Treasury. It sets the rate of yield of these treasuries that the Treasury makes. So we're seeing 180 billion-ish or so, give or take 20 billion of demand being bought by these stablecoin providers. And you look at our biggest debtors, or biggest creditors rather, in like Japan and China, and it's just a little over $1 trillion, right? So already these stablecoin providers like Tether specifically is like 1/10 of the debt held by our longest debt partners in China and in Japan. And this is so new. This is such a new currency, or rather a new economy, and it's just going to get crazier. It's just going to build even more and more and more. And I argue actually that the regulatory regime of the United States, of course, is kind of, they're the kingmakers. They're the ones that sort of set the policy that sort of dictates, what kind of happens in the rest of the world. Obviously, it's a little Western centric, but it's kind of true, especially for the economy. I think that's kind of true. And so we're seeing right now, an adoption, or at least an interest in adopting, new capital requirements for the United States system, like a Basel III, that would actually have a significant influence in this sort of this axiom specifically of Bitcoin appreciating and needing dollars on the books. So if Bitcoin is determined as a liability and not really an asset in terms of balance, on your balance sheet, then you need to offset Bitcoin appreciating with dollars, as this capital requirement, axiom, basically to appease, hey, there's a lot of risk in having Bitcoin. So if you want to play with Bitcoin, you want to have it on your books, well, you better hold a lot of dollars too. And so it creates this artificial demand, and it creates this, Bitcoin is this really special thing, right? Because it's demand inelastic. So no matter how much demand is there for Bitcoin, there's a set amount of Bitcoin issued every 10 minutes. It doesn't matter how many people want it. So it's kind of the first commodity ever to really establish that. Whereas, oil or gold or silver, these previous sort of energy standards, if there's a huge demand spike for gold, gold 4x's in price, you can send 3 more people down the mine, go get a bunch more gold. There's a lot more supply that hits the market, and then demand goes down. Bitcoin doesn't care. It's completely demand agnostic. And so the supply doesn't change. So you create the system where you actually have, we've created this huge debt bubble of dollar denominated debt. And now we have basically this vacuum of Bitcoin that can suck all up, all of this debt, this huge bubble, and right into this demand inelastic asset. And if we create a regulatory environment that requires companies that hold in the United States, a lot of Bitcoin to hold dollars, now we've created this mechanism for Bitcoin to appreciate, substantially, and require trillions of dollars of dollars to be held by these institutions that hold Bitcoin. And so that's part of this Bitcoin dollar play that I think is really important with a Zappo. And that's kind of why we were looking at this piece. I really wrote the Bitcoin dollar as sort of just a mechanism. It was sort of a look at, okay, well, this is kind of a complicated thing. A lot of people don't necessarily know how interest rates work or the treasury system works. And I didn't really know, until I was researching the book and kind of getting into it. This knowledge is sort of obfuscated for a reason, so that we don't know how it works.
That's for sure.
Yeah, totally. And so you look at a Zappo, and they kind of built, the 2 things that you really need to create this Bitcoin dollar system. One being obviously extreme security. You want to hold these keys. You want to inflate, bits and bytes to be worth trillions and trillions of dollars, which is where we think this is going as Bitcoiners. Well, you damn well better be sure that you can secure those keys really well. And Zappo really built that. They did really absurd things. As I mentioned, putting stuff in space, digging it into the ground. They even did stuff where they, created these pulse, like fingerprint scanners that have a pulse reader on them, so that you can't just cut off someone's hand and put it on the thing to get someone's keys. It can tell if the hand's been cut off, right? Like all of these just super, to build a system that holds trillions of dollars, you need to have this highly secure level of key management. And Zappo built that. And it came out of, it wasn't really what they were trying to do. It came out of just, I sold Bitcoin as this great thing to guys like Peter Thiel and Reid Hoffman. And then they wanted to buy millions of dollars of it. And then it, grows thousands of %. Now it's worth billions, and it kind of came out of this just necessity of his friends saying, hey, keep these things safe for me. So you have to have that super high security. And then also you need to have, again, this regulatory environment, this capital requirement, and the Bitcoins be within the United States. That's obviously an essential part of this regulation play. And of course, Zappo sold its custody service to Coinbase in 2019, including Grayscale, including just an absurd amount of Bitcoin. I think something like 514,000 Bitcoin, I think, were transferred to the United States from Gibraltar back into the regulatory regime of the United States via the sale. Grayscale specifically did like 225,000 Bitcoin. It was like 2.7 billion at the time. It was the largest cryptocurrency transaction at the time, all bringing it back to the United States from being held out of the regulatory regime of the US. So Zappo really has kind of created the Bitcoin dollar system. Obviously, they don't affect regulation specifically, but then you go and you look at some of the biggest lobbyers in the country, and this is what kind of part 2 is going to be about. And Wincest is the head of Coin Center. He's the chair of Coin Center, which is the biggest lobby in the U.S. And Paxos, which is affiliated with them, and with PayPal as well. Charles, was one of the founding members of Coin Center as well. So you start to see kind of this system kind of being built. Here we are with, basically 1 million Bitcoin have come back to the United States just specifically through this company, selling back to Coinbase. So that's kind of where we're at. And I think
in the private markets,
ETFs,
when you say that, you're saying
yes,
privately through the ETFs that are held, people have paper receipts for these Bitcoin. Okay.
Right, exactly. So it's like, okay, when the Bitcoin ETFs were approved in January, I think it was January 11th, there were 11 that were approved. BlackRock's IBIT, their iShares, ETF offering, which is the fastest growing ETF, in the history of ETFs. I think they hold almost 400,000 Bitcoin now. They're custodying with Coinbase. Grayscale is with Coinbase. ARC21 shares is with Coinbase. Bitwise is with Coinbase. So, something like 800,000 Bitcoin just with the ETFs are held by Coinbase custody, which of course is using the infrastructure set up, by Zappo. So when BlackRock rang the bell for NASDAQ on the 11th, on January 11th, they invited Wincest to ring in the bell with them, which I thought was kind of interesting. There's really no direct affiliation between BlackRock's IBIT and Zappo, except if you look at, in 2019, actually, they sold this whole service to Coinbase. Interesting. So yeah, that's kind of, Zappo really has built the Bitcoin dollar. They were the first regulated bank to integrate USDT in 2023. They integrated USDC in 2022. And I think stablecoins being this huge demand for US treasuries and this custody, this just unbelievable, extreme security measures, being built up by Zappo. Here we are. So this Bitcoin dollar system that kind of became as sort of this idea that I had in 2021, the first time I wrote about it. Now, we've seen this, basically appreciate into, something that holds, 5% of all liquid Bitcoin is like kind of within this Bitcoin dollar system very, very directly. So yeah, it's very interesting the way that this is developed. I think the ETFs are a huge game changer for Bitcoin. Obviously, I'm sure and you've talked about it quite a bit here on the show, but this is a real game changer, and the people that built the infrastructure are, right here with Zappo.
Wow. I wanted to. The Endeavor was a huge piece of the article, and you had mentioned the WEF's Young Global Leader Program, the YGL. For people that aren't familiar with this, like Justin Trudeau, there's a lot of other very famous. Maybe you can name more, but there's some very famous world leaders today that came out of this WEF's program. And you're using this almost as an example of these social groups that entrepreneurial social groups that have been stood up to reinforce and seed and kind of percolate out these bigger agendas that they're trying to do. And instead of the WEF's Young Global Leader Program, you talk about this one that's called Endeavor. So explain how this works with respect to intelligence affiliated venture capital firms kind of dominating this financial technology industry, and how much of an impact has Endeavor really had? I guess if you were going to put some magnitude on it, how much has this specific organization had, in your humble opinion? I know that's a very qualitative question, but
no, for sure. Well, I think the best way to answer it is kind of through the way that they explained it themselves, which I think is, in many ways, it's kind of disturbing a little bit. Depends on how you look at free markets. But basically, Bronfman in the 2009 Endeavor Gala, Bronfman came in a little bit later after the founding. I believe it was founded in 98. Bronfman came in, I think about a decade later. But Bronfman came in and, he does this talk at the 2009 Gala, and he talks about how he was discussing with the Chilean Endeavor, entrepreneur, and was saying that the top three leading candidates in Chile at the time for the presidency all had used entrepreneurship as a like a pillar of their platform. All three of basically the choices that the Chilean public had to be president were all pushing entrepreneurship. And when Endeavor was founded in '98, there was no word in the Spanish language for entrepreneur. And so he does this and he says very specifically, this is all thanks to Endeavor. That basically they've focused on emerging markets and specifically Latin America. And they came in and they established this private sector, this blossoming of private sector activity, entrepreneurial activity. In specifically, I think Argentina is a huge one, Brazil. But yeah, like literally this word didn't exist in Spanish and now everyone's pushing it. And you can see that the effect that this has on the language of the people, as well as obviously the public sector, right? I mean, these are three people running for president that are all pushing, free markets and entrepreneurship. And I think a lot of people obviously will say, well, hey, isn't that good? Isn't the free market? Isn't this a success over, let's look at, something like what's happening in Argentina now with Milei. He's really pushing the free market. Isn't this great? Well, kind of. I think I am a free market capitalist. I'm not saying that we should regulate away anyone's ability to, participate in the market or not be able to run for president because they made money once. Like, I'm certainly not saying that. But when you look at, that these are people that are all funded by, a very small group of people that have connections, significant connections, not just weak connections, but significant connections to organized crime and intelligence-backed, venture capital. You start to see that, well, maybe this isn't really the free market. Maybe this is crony capitalism, and it's having an effect on the language of the people, right? So I think an interesting thing to looking at with Endeavor. So yeah, the YGL is basically this public sector, infiltration of cabinets, and Endeavor is really going for private sector. And so I think it's important to kind of look at the history of Endeavor. So Peter Kellner and Linda Rottenberg, funded and founded Endeavor, rather, having worked for this group Ashoka, which was funded by Bill Drayton. And Bill Drayton is, he was a pretty big guy in the Harvard Business School. He started this thing, these Ashoka roundtables where, entrepreneurs and people would come together and they'd start kind of sharing ideas. And this that was sort of the first real birthplace of this sort of like multiplier effect, as Endeavor calls it. But, things like the PayPal Mafia, where it's like, well, how did these guys become multi-time billion-dollar founders? Like, who strikes lightning, who strikes gold twice, right? Never mind 3 times, 4 times. And it really became, it happens because, they're able to use their influence to, corner markets and dominate them and basically look for opportunities for monopolies and dominate them. And this is not just me speculating that. This is that's what Peter Thiel says. I mean, he goes up there and talks and says, go find a thing that someone is doing poorly. Don't look for competition. Competition's not good. Find a thing you can dominate and dominate.
His book 0 to 1 talks about like the desire to become a monopoly, like literally right in the book.
Yeah. He says competition is bad for profits. I mean, that's something that it's said. And this guy is this, considered this libertarian champion of the free market. And he's literally saying competition is bad for profits. So I think that's an important, framework for this a little bit, right? And again, I just want to be very clear, just so I don't lose my libertarian credibility here. I'm not saying the answer is regulation. I'm saying the answer is let's call these people out and let's call a spade, right? So Bill Drayton, this guy who funded Ashoka, he was the guy that, he invented the term social entrepreneur in like the 70s in 1972. So right about the time the petrodollar is being established and the Nixon shock happens. So he's coming out of Harvard and is bringing up this whole new idea of like the citizen sector. So you have the private sector, the public sector, and then you have this middle ground, this nonprofit sector. And there wasn't really a thing going on there in the early 70s. It wasn't really a big thing. So he comes out of Harvard and establishes this group, Ashoka, and probably the most important thing that came out of this group was this idea of like microfinance and microloans, which is obviously sort of kind of the predominant way that people think about financially affecting emerging markets nowadays is through like microloans.
Yeah, on the face of it, it sounds like, oh, that sounds like a great idea.
Totally. Absolutely.
Yeah.
But then you actually look at, well, hey, what are these guys really trying to build? They understand that, hey, in the world of free money, freely printed money, fiat money, it's not really necessarily about the profits anymore. Maybe there's these other, things that are kind of worth more than revenue coming in, than kind of these proto information brokers. You're looking at microfinance as a way to sort of grab a whole bunch of information about individuals, right? Because it's instead of, these kind of, neighborhood banks, getting funding and being able to distribute it out. It's like you're going directly to the individual. So you're getting a lot of information about them. Plus also they're higher yield. And they give these banks, a lot of opportunity to, make money off of the fees that happen from these micro loans. And, you look at a lot of these, these sort of philanthropic ventures, or, even like something like, like COVID response. Bank of America made billions of dollars off of giving out money from the government just in processing fees. Maybe not the best example for microfinance, but it kind of is, because, those were fees made directly, depositing money. I get money from the government. I deposit directly into your account, which is very similar to what these microloans are doing. And then I take 5% each time. It kind of centralizes power in a very specific way and gives a lot of information to these like information brokers that are kind of playing as the banks or the fintech people in this case. So now we're seeing, basically this new kind of concept of philanthropy, being this microfinance and this micro loan space. And Drayton actually has a quote where he says, within 5 years of being an Ashoka fellow, 50% of them change national policy in their respective countries. So even though it's looking at the third sector, the citizen sector, this, nonprofit sector, they're saying that, within 5 years, half of the people are changing policy in their country. So you're seeing that directly come out of a Harvard, this, really important kind of, American institution is coming out here, starting this thing totally guised under philanthropic, means and intents. And within 5 years, 50% of them are changing the country. You look at Endeavor, they're creating new words in languages, and changing policy and changing, focus of what the public sector looks at, even though they're not focusing on the public sector, publicly. So the Endeavor really came out of this Ashoka model, this microfinance model, and this citizen sector model, and is totally having huge effects on the public sector and the people of emerging markets, and again, specifically Latin America. So, Endeavor is a very fascinating kind of case study, and you start to look at, who are sort of the Endeavor success stories? Obviously, Wences Casares is a huge one. He started Patagon. He started the first ISP in Argentina, which obviously has, huge, that's exceptionally important in emerging markets is who runs the internet service providers, especially as all these fintech things pop off. And then, the first success story, the first Endeavor Group, company to go public was Mercado Libre, which is sort of considered like the Amazon, eBay of Latin America, run by this guy, Marcos Galprin, who's the richest man in Argentina. And you're starting to see, especially when you pair that with Wences Casares' Zappo, which is, heavily has huge PayPal ties, former PayPal member, board member. And you start to see basically a reestablishing of, what made PayPal. It was that they had a market with it when it first, really took off, which was eBay, and eBay eventually bought PayPal. But PayPal never would have worked without eBay. There would have been no need to have settlement via email, basically. Settlement that also has fraud protection. That was really the big state change. It was instant settlement, and fraud protection.
Which led into
So
Peter's Palantir spinoff after dealing with all of the security side of PayPal, if I remember right.
totally. I mean, Palantir, I mean, yeah, basically building the private sector security state.
Yeah.
And actually, very interestingly, Palantir technically started at PayPal.
Yeah.
And spun off, which is kind of disturbing, frankly. Basically this idea again that free markets are so great and everything's so great. Well, I don't know. I'm not necessarily cheering on Palantir being, it's a government contractor. They're getting all these huge government contracts. They live off government contracts, but they actually retain more, because they're private sector, they can kind of do more things that a public sector company wouldn't be able to do.
Yeah.
And this plays really importantly, again, not to just jump all over here, but
massively.
Yeah, absolutely. Yeah. Totally. A public sector, a government sector company, has a lot of things that they can't do because they're government sponsored or they're literally reformed in the government. So there's a lot of customer right restrictions and a lot of things that, they sort of have to give everybody access to. Maybe there were some things about if you're a felon or whatnot or whatever, but for the most part, if you're government, you're a public sector company, you have to be extremely inclusive. And your ability to just sort of restrict speech or restrict access at a whim, or even sell data at a whim, it's much harder to do. So these companies, they live off of government contracts, but they're private sector. And that's exactly what Palantir is. It's essentially a privatized CIA. That is, a huge data broker. Yeah.
Just to give people a little bit of background on like Palantir, like we're saying these things, but we're not giving you any examples of like what they do. So like police cars, like a police force could hire Palantir. They put these video cameras on the back of all their cop cars. The cops then drive around. All of that information, video content, depending on what sensors they're even using on it. I'm just assuming it's video, but there might be other things like LiDAR or whatever. They're collecting all of that data, all of that information, and then they're running basically pattern analysis. So let's say they drove past the bar and the video collected a license plate XYZ that was at the bar. It is pinning that, geolocating that license plate. And let's say that license plate's there every day at 3:00 when that cop car drives past the bar. They now know that so-and-so who's tied to that license plate drinks, and then they run AI and all this other stuff on all this information and data, and they have a whole construct of like what's happening in that town. And I think that your comment that this is in the private sector, some people might look at that and say, well, that's better than the government having it. But I think what's lost on people is the government can just then ping Palantir and say, hey, can you tell us this? And they're like, yeah, sure. We're a private company. We can tell you whatever you want. Right. Like it's
absolutely.
Privacy.
In fact, that's what they do.
Yes.
That's what they do. It is exactly. I mean, like you could look at Peter Thiel as the guy who has established the company that sells your data to the government.
Yeah.
You could really look at that. And I think that, the contracts sort of speak for themselves that yes, this is, In-Q-Tel, right? Which we haven't even talked about yet. In-Q-Tel was essentially, it was the CIA basically saying, hey, the dot-com boom is happening. The 90s are happening. And we need to compete with Silicon Valley. And the way that we compete with it is by becoming it. Right. And the way that we do that is by VC firms. And a lot of them are shadow VC firms, but In-Q-Tel is actually directly, the CIA affiliated venture capital firm, and In-Q-Tel specifically helped create Palantir. And Palantir's, first contract was the CIA, and they fed off the CIA for an extremely long time. But so yes, they are quite literally. It's hard to say if it's if it started in the public sector and moved into the private sector, or it was a private sector from the beginning but funded by public. It's all kind of wishy-washy and nebulous by design. Again, I would say by design. And I think this mechanism of private and public is very interesting when you understand that, okay, the CIA has created a venture capital firm. It's investing in companies like Palantir, like Chain Analysis. And then also as we're coming to the digitalization of money, So there's a lot of talk about how bad CBDCs are, which of course they are. They're not great. We don't want the government to have all this information. We don't want the government to be able to blacklist or do a lot of these things with users' money. It's a very obvious, easy thing to see as being like an overreach of power.
Mm-hmm.
But people don't apply that same skepticism to private bank digital currency, which is what a lot of these, sort of stablecoin issuers are.
Mm-hmm.
You look at a Tether, and again, I understand a lot of people have a lot of sympathy for stablecoins in the emerging markets. Hey, it's
Yep.
better than inflating peso. But you look at, they've integrated the FBI, the Secret Service. They've integrated InQtel funded chain analysis into their platform. They're buying up U.S. debt, as much as anybody. And because they're private sector, they actually, again, retain a lot of this blacklisting ability, this restriction, this ability to seize funds, to restrict your spending, a lot of things that maybe a government issued currency couldn't do. They wouldn't maybe be able to restrict customer access, right?
My issue with bashing the stablecoin issuers
Sure.
and all of it is just when I look at where we're at with the legacy system and transmuting all of that over to this Bitcoin system, which actually has a peg and all the things we talk about every show, and that
Sure.
we talk about at Bitcoin Magazine. I just don't know how you port that legacy system from where it was to where we need to go without there being some type of private. I would much rather have some type of private CBDCs in the form of 100 of them or 10 of them or whatever than one U.S. government entity that's then managing a CBDC. And Mark, I don't think we can get from there to where we're going without this happening or this being here. So then the question becomes, so like, what's a better solution than this? I don't know. I can't answer.
Yeah. Yeah, it is interesting. And again, I do have a lot of sympathy for it. And again, anyone that says they know what the answer is a liar, because no one knows. We're learning this in real time. Markets are 24/7. We're all learning here. But I would push back a little bit on this idea that I think there's innately a king-making element to the treasury market, right? I mean, the US government is essentially saying, yes, we approve Tether because we're selling it boatloads of US treasuries and not seizing the treasuries and saying, okay, well, we'll sell you another $50 billion of treasuries if you integrate chain analysis, you integrate the Secret Service, you integrate the FBI. And so there is sort of this kind of, there again, it's sort of a pun, but, there is a tether to the U.S. government and the U.S. Ponzi by creating, a mechanism where they sort of have to play ball with what the U.S. government wants, or what the public sector wants. And I would again say that, yes, this idea that there should be a lot of them is better than the idea that there should be one, which I definitely agree with. But how do how can we create dollar instruments and kind of do have this transitional period into a Bitcoin system? Is there a way to do it that doesn't perpetuate the U.S. Treasury market? And I think that there are. I think there are ways to build what is in effect a dollar instrument that doesn't perpetuate government debt and doesn't allow
via DLCs and Lightning. Is that where you're going with it?
Sure. Or eCash or whatever it is. I think there are really clever mechanisms that we can build. And so I think it's important to clarify. And this is why I appreciate the pushback. And it's a great question is like, well, I don't think the dollar as a mechanism or as an idea is a bad thing. I think it's a role in the way that the treasury market perpetuates the military industrial complex, the way that the U.S. government has used the U.S. dollar system via the treasury market, via the debt market, to basically enact financial terrorism on, the global South through like debt weaponization.
Yes.
Let's defang that. We have Bitcoin. Bitcoin maybe can't necessarily work as a currency for 8 billion people for every single purchase that they need to make in a day. There are some limitations to how many transactions you can fit into a block, even with covenants, even with layer 2 solutions. There are some limitations. I'm not like naive to that. I think we can do a lot better. I think we can onboard billions of people to Bitcoin. I definitely don't. I'm not. I haven't given up on that idea. But how do we create Bitcoin to be basically a reserve asset? That's really what it is. I mean, I think it works really well as a reserve asset. It maybe can't compete with the dollar, but it certainly can compete with treasuries as the settlement network that other currencies are built on top of. So why can't we have US dollar instruments that are backed by Bitcoin, and be successful that doesn't perpetuate the treasury market? So a lot of the things that people say about Tether and about this and that USDC and that, there's such this huge dollar demand and, we can't go overnight. Sure. But that doesn't mean we need to perpetuate the treasury market. So I'm very sympathetic to this idea that people need dollars or want dollars and that Bitcoin is not ready to monetize as a currency yet. I'm totally sympathetic to that. But let's build a system that, doesn't, kick the can down the road for the US government one more time. Let's not recreate the petrodollar system. Let's be clever. Let's write code. Let's be cypherpunks. Let's do some clever things here to basically use Bitcoin as a reserve asset for a dollar-esque instrument that doesn't touch treasuries. So, and I think that's totally possible, whether you use, DLCs, as you said. There's some really interesting things going on with like stable channels, basically using like a lightning channel where one side is long the dollar, one side is short the dollar. Things like that, eCash, that create basically this idea of the dollar without perpetuating the debt Ponzi. So let's do that. Let's be clever. Unfortunately, and I'll give you a little alpha here. This is something that working on, for the next piece here is, obviously the biggest example of the algorithmic stablecoin is Terra Luna, of course.
Yeah.
And I don't want to get too much into it, but the main reason you could argue that the Terra Luna protocol imploded was, these super high unsustainable yields that were being perpetuated by the system, and the main, the highest yield in the system were over 72% of all of Terra's wealth was stuck in at the time of popping, was in this thing called the Anchor protocol.
One of the most common questions I get asked from family and friends is, Preston, where do you personally buy your Bitcoin from? And the answer is really simple. I buy it on river.com. Not only can you easily buy Bitcoin with zero fees on recurring orders, you can have peace of mind knowing Bitcoin on River is held one-to-one in multi-sig cold storage, all while being fully licensed and regulated in the United States. Plus, their relationship managers are US-based and available by phone for you or your business. Additionally, River has built their own infrastructure from the ground up, which means they don't rely on third parties to function like other Bitcoin exchanges. River also just created a new feature not found anywhere else called River Link. It allows you to send Bitcoin over a text message to easily orange pill your family, pay a friend for dinner, or send a gift. There's a new standard for investing in Bitcoin, and River is setting it. Go to river.com/fundamentals and get up to $100 free when you sign up and buy Bitcoin. That's river.com/fundamentals. In a world where convenience often compromises security, many investors settle for solutions that do not fully meet the demands of Bitcoin security. That's where the Bitcoin Way comes in. Offering a personalized white glove service, they will guide you through every step of the way to achieve full self-custody, ensuring you adhere to the strictest self-custody standards. Their experienced team helps establish robust security practices that cover all aspects of self-custody, cybersecurity, and privacy. Their ultimate goal? To empower you to become fully sovereign. Beyond securing your Bitcoin, they also offer services such as inheritance planning, Plan B strategies, assisting in relocating to Bitcoin-friendly locations to further enhance your sovereignty, and much, much more. Take the first step to true financial independence. Visit thebitcoinway.com/TIP to schedule your free consultation call. Don't delay in securing your generational wealth the right way. Opt in for security over convenience and protect your future. Your family line will thank you.
And the Anchor protocol was designed by this guy. I believe his name is Ryan Park. out of Korea, and he was given a Teal Fellowship to build Anchor and basically create
I did not know that.
this. No one knows it. It's not really a
Wow.
well-known thing. And so you look at, well, okay, how come every single regulation, every single stable coin bill, like the Gillibrand Lummis bill, you're looking at this, how come they always talk about, how algorithmic stable coins are bad? Why is that? Why did we manufacture this consent to basically say that, no, Bitcoin can't be used to create dollar instruments. We can't do that. You could very much so make that claim that this was manufactured consent for treasury-backed stable coins in lieu of algorithmic stable coins.
No doubt.
And now we're seeing PayPal is partnered with Paxos and is doing PYUSD. And I actually talked with Walter Hessert, who's the head of strategy at Paxos, and he said PayPal is incredibly well positioned to capitalize on the incoming boom of trillions of dollars of highly regulated stable coins in an environment where USDC and USDT probably won't survive. Now, again, he's pushing his bags, right? He's obviously very connected with Paxos. Who's to say what crystal ball he has for where regulation is going? But he's basically coming out and saying, a couple important things. And the main one being trillions of dollars of highly regulated stablecoins means what? Well, it means trillions of dollars of treasuries that are being bought by stablecoin providers. We're talking money. We're talking money printing
by a winner that's already been pre-selected. Yeah. Well, when I look at Tether, like so much of it's euro dollars that they're basically, sucking out of the market. I want to explain to the listener real fast, and if I get any of this wrong, please correct me, Mark. But when you say a Lightning channel dollar stable coin, imagine Mark and I basically opening a channel together. Let's say that we open a 10,000 sat channel with each other, and we also construct a discrete log contract, basically a smart contract that follows the price of the dollar, and every 10 minutes or every hour or whatever we define inside of that discrete log contract, it updates with the amount of sats that then need to flow to Mark or back to me based on who's taking the long dollar side and who's taking the long Bitcoin side. And if you get enough people to open these channels with each other, your risk is very, very different than Terra Luna as far as a synthetic stable coin, which was almost like a consolidated debt obligation, like the 2008, like where you're chunking all this stuff in there and you got yield and everything. There's no yield associated with this. This is just a constant. Now you need a good reference spot price for it to, because this is effectively a derivative in this channel, a derivative of the dollar. And if you do this at scale, these micro channel dollar stable coins, you get in a weird world where it's all Bitcoin, but it's moving and representing dollars without having to buy treasuries or any of that stuff. And this is, in my humble opinion, really fascinating stuff. And I think that in the coming 5 to 10 years, especially when you get into developing nation states that probably aren't using or don't need really large channel capacity, but need some type of hedge in dollar terms for whatever debts they've got, I think this one gets really fascinating, really fast. I'm curious if you have any other comments on that, Mark.
Yeah, 100%. I had a really interesting conversation at Bitcoin Azores last year with this gentleman, Tony, who developed this idea of stable channels. And he actually came up to me and he was like, "Hey, I read your book. And I've actually done a lot of work in, not to dox or anything, but in kind of tokenized treasury systems and kind of worked with some of these banks." And he was like, "I don't want to perpetuate this stuff. I don't like this stuff. I don't want to be the guy, building these things for these banks. So I'm going to go work on a Lightning based system that, exactly as you said, it's all Bitcoin. It's very, very cool. It doesn't touch dollars at all, but it gives, what is essentially like the idea of a dollar, mechanism to one side of the, to whoever's long, the dollar, on their side of the channel." And yeah, as you said, Lightning, you can pass back and forth. You can update it as much as you want. You could update it every 30 seconds. You could update, using your Oracle, basically update it every 10 minutes, whatever you want. Obviously, there is some trust involved, as always there is in some HTLCs in Lightning. But you can always leave. You can always close the channel. You can always take your money whenever you want. You can't get rugged. You can't give the money to the other player unless it's not in any way that isn't an agreed upon at the time of the writing of the contract. Someone can't just run away with your money, which is not true of something like a Terra Luna, obviously. So yeah, I think it's very, very fascinating. I think Lightning is going to be a really interesting, settlement layer for a lot of these things. And I've written about this in regards to eCash, which is, a custodial mint that gives you, pretty good privacy within the mint. And you can kind of create, things that, decently private payments that then you can settle out with Lightning. And there's some trust involved, but it's pretty good depending on, this idea that everything is going to be built without trust, I think is a little bit nutty. Obviously we want to minimize. Sure, of course. Yeah.
Yeah, exactly.
Exactly. But if you want to send a Bitcoin transaction and you don't want to have any trust at all, you don't need to. Just settle something on the Bitcoin layer. Totally fine.
Amen.
Or use Lightning and do it that you're entering an agreement with someone else to have a shared channel. Obviously, there's limitations of what they can take from you, but it's as long as you can settle and close the channel, it's pretty trustless, right? eCash not quite so. The mint has the ability to rug you or debase you, depending on how long you have exposure to the mint. But if you have very minimal exposure to the mint, you can do some pretty interesting things. So I think we're going to see Lightning, evolve and be really interesting and connect a lot of these systems. But yeah, if you want to trust the system, that's what Bitcoin's for. I mean, that's why it's a state change. It's this unbelievable tool that really empowers people to have trustless settlement without a trusted third party. I think the thing that people miss about this, though, of course, is that this also empowers the baddies or the U.S. government or the private sector ghouls that have, run crony capitalism, for the last 50 years plus or whatever, right? So I think that this idea that Bitcoin just eliminates corruption is just ridiculous. Of course not. There can be corruption in a Bitcoin system. What there can't be is monetary debasement. They can't just, continually debase our funds now that we have a place that we can hold our money in that, can't be inflated away. Bitcoin is a disinflationary system. Eventually will be deflationary. And that's a state change of money. And so that's phenomenal. So, but it goes both ways, right? It's like, I'm in this funny place right now with Bitcoin where it is everything I always thought it could be, which is fascinating. Seeing this play out now, it's the biggest talk of the election cycle. You're seeing this thing that was a twinkle of an idea in 2021 is now, the Bitcoin dollar system is really here. It's the presidents are talking about it. We're fully in. We're not turning back. But it empowers the ghouls of the financial system as much as it empowers, the unbanked and the global south. So I think we just need to be wary of that and aware of it, really more so than wary of it. And so the systems that we build, are we really building sustainable systems that empower people, or are we building systems that perpetuate the U.S. Treasury system? And Bitcoin can, really, it can defang the Treasury system. So let's let it do that. And let's learn and see what mechanisms are being built and who's really the money behind these mechanisms. And that's really the purpose of this piece, I guess, if we could kind of sum it up, is that, wow, there's InQtel money. There is CIA directors, on the board of Greylock Partners who are, seed funders of, a lot of these companies. They're highly connected with Endeavor Catalyst, which is the venture firm of Endeavor. That's heavily connected with the Zappo. And, you're beginning to see sort of intelligence crony capital linked players building the Bitcoin dollar system. And so how do we not support these groups and, again, build right code and educate people that, we really have an opportunity here to make a difference as we, move into the Bitcoin era, because I think it's undoubtedly we are in a new financial system for sure. I mean, Larry Fink is out there shilling our bags, right? I mean, we got the biggest money manager in the world shilling our bags. Why? And how can we, not just get rich and, forget about the ethos of why we're here, which is, I'm not here to get rich. It's a cool side effect, but I'm here to be free. I'm here to, I saw what happened. I was, 18 when 2008 happened. I was a little too young to really participate in it, but like, I remember Occupy and walking the streets of Occupy, and then it got very kind of co-opted, and kind of this ethical movement sort of deteriorated. And now we're kind of back doing this again, and the crony capitalists are sort of running amok doing their thing again. And I would really like, I don't trust a lot of these players. I don't trust a Larry Fink. I've seen what he's done, buying up a lot of these places and buying up infrastructure and commodities, across the global South. And I just have a lot of trust issues, rightfully so, I would say. So I hope Bitcoiners don't lose that. It's not to say we can't celebrate. Hey, okay, let's have a little cheers. It's the presidents are talking about our bags. That's fun. But let's remember why we're here, and how we can build systems that actually truly give us an alternative. That's what I'm here for.
Well, I love it, and I think at the end of the day, the proof of work of what you're saying and preaching right there is in the articles and the thought pieces that you are clearly working very hard to produce and putting out there. And at the end of the day, it's all about education. It's all about shining a flashlight in all these dark corners to help people decide for themselves whether they agree with your article or not agree with your article. All the information is there. All the resources are there for them to spot check and go find out whether they believe it or they think it's spun a certain way or whatever.
Totally.
And that's what I love about your work and Whitney's work. And I can't thank you enough, Mark, for coming on. The name of this article for people, The Chain of Custody, the Mafia Holding the Elite's Bitcoin. We'll have a link to this in the show notes. We'll have a link to Mark and Whitney's Twitter. Anything else that you want to highlight or point the listener to, Mark?
I mean, I think you really just nailed it right there at the end. Is don't trust me, and not that I don't try so hard to be a trusted voice, but it's not like I don't want you to just offshore your trust to me. I'm just a guy with an internet access. Like same with Whitney. Same with yourself. We're just desperately looking for meaning, for truth, for whatever, and don't trust my spin. Don't trust my, thesis or my idea. Like, look at the links, look at the source material. There's obviously been a lot of trust lost in media, which I think is rightfully so. But let's not just then, just place that in new voices and new talking heads, because I think that is a huge part of sort of where we're going next is, okay, well, mainstream media is dead. Alternative media is here. But a lot of these alternative media guys and gals aren't necessarily to be trusted either. I think develop trust with people that you care about, that you like. You watch, this show, you watch shows that I'm on or Whitney, or read our stuff, and you develop relationships with pundits, but really make sure you're trusting the source material. There's a reason why basically every sentence in this thing has a link, because, there's so much, like source material that needs to be poured over. And there's a lot of stuff that I miss too. And there's a lot of stuff I'm going to continue to miss. There's also a lot of stuff I purposely don't put in, not because I'm trying to avoid conflict against my thesis, but stuff that is just, maybe not super, super relevant. There's a couple things in here that, just aren't necessarily that relevant, but are interesting. Go jump off this work, go find other things in here, find your own research veins, find cool things, share them. Because I think we really have to kind of decentralize, truth finding. And we shouldn't just re-onshore it to, trusted figures that then can be manipulated or incentivized, to work against us. So, trust me as far as you can throw me, which probably isn't super far. Look into the work itself. I love the writing. That's what I'm here for. I love the interviews too. Love catching up with friends. It's great. But, really take a look at the work, take a look at the links, and make your own conclusions and find your own research veins, and then share them back with me. So, but yeah, Preston, man, absolute pleasure. Really appreciate it. I as I was saying when we talked, kind of coordinating this, I think you were, one of the few people that really at the beginning were, I think being very intellectually honest about stable coins and treasury demand. And you were very early on to this. So, I was excited to come on and talk, and yeah, appreciate the
Thank
love,
you.
man. Thanks so much for having me.
Thank you so much, Mark. Such a pleasure having you.
They want people to vote for them, then we tell them that Bitcoin's good for them. Bitcoin's good for their people. Bitcoin's good for society. Bitcoin fixes a lot of issues. It doesn't just fix money, but it fixes energy. It fixes politics. It fixes so many parts of our lives. We need to sell this to them.